Hi guys, good morning from Nigeria. Welcome. Putting out this video to make an introduction to my forex channel, SamirFx. It's something I've wanted to do in a long while now. Starting a channel where I'll be able to document my trade, show the thought process behind my entries, and how I trade. So basically, it's a channel that would not it's a channel that just shows the trading process. Not the focus actually is not on all the millions you can make. Of course, you can make millions trading, but I feel like that's a wrong um, thing to focus on initially. So as a trader, you have to start from the basics, which is like price action, looking at the process, not focusing on money and trying to make millions and then a bit of a background. I've been trading for a while now. Nothing crazy, small accounts here and there. But I feel like the process is still the same. The thought pattern is still the same. You can actually trade small accounts, but you will not make crazy money. But as a side also, probably you're like working or doing something. Yeah, you can take up small accounts, maybe $100, $50, make like you're using those small accounts to master your trading psychology. So you're not throwing in a huge amount of money and trying to you blow it through fast. That's just a summary. But if you have small accounts with good risk management, you can consistently grow the account. Yeah, so consistency is one of the things I've struggled with my trading career. I've not really been consistent yet, just making few profits here and there. I tried FTMO once, but I think in retrospect, me doing that FTMO at that point in time was totally like I didn't have the proper um I wasn't prepared. Let me just put it that way. Because I in retrospect I was taking wrong lot size and position sizing for the particular account size that I had. So if you're going to think that okay, if you want to think that okay, having a bigger account means you'll be successful trading, that's really not the case. You have to understand the psychology, the risk management first. So even if you're trading a $50 account, it's still the same set of rules that you apply if you're trading a $50,000 account. It's just you have to understand those basic rules first before you think of getting massive account. If not, you just end up blowing the massive account. Yeah. So me, I've been trading here and there, nothing crazy, nothing major. But I'm also an engineer, so I'm not a full-time trader. I work. Yeah. So just for the purpose of transparency, so that you understand that sometimes you don't have to just think that trading will do everything for you. You have to be coming from somewhere. Like, what do I mean by that? I see a lot of people that they don't have like a source of income and they want to jump into trading. You might succeed, but what happens when that account goes off? You start looking for money again, or maybe money you're supposed to use let me give an instance for a student. You use your school fees to go and trade. That's crazy. Don't do that. Or you basically use your feeding money to trade. That's not advisable. Trading should be approached first, like as a side hustle. Yeah, you put in maybe let's say for instance you have a portfolio of 100 naira, like your total income or your this is 100 naira. So you can say okay, I'll dedicate 10% into trying out trading. That's the approach. So you can't use all your life saving to set up an account and then you try to trade it up. No. It will make you trade under pressure and you'll be so scared of doing anything with that account because the risk will be too much for you to bear. So basically, you can start small, grow your account consistently, and then when you're comfortable with small accounts, then you can start trying out prop firms. Prop firms are like companies that give you big account to trade for a fee, and then if you pass their set of challenges. So that's just basically it. So trading is interesting. It's quite interesting. You have to understand the charts. You have to understand what you're doing part time. You have to understand what trend you're in. Are you in an uptrend? Are you in a downtrend? Is the market consolidating? And you have to be making these decisions in real time. That's where the pressure comes. Like if you're looking at a previous chart, let's say you're looking at last month's chart or let's say GBP USD, You might make all the right calls. You'll be like, oh, if the market had gotten here, I would have sold, I would have done that. But in real time, you don't really know what the market is about to do. So you're basically speculating. But the difference is what makes you a better trader is when you're speculating with proper risk management. You have an account of, let's say, $100. You're risking maybe $10 to make 30. You understand? So whether you're feeling is a feeling based on some things you're seeing on the chart. If you think that okay, this market has approached a resistance, I'm going to sell it right now based on certain confirmations and confluences, and you start selling, what if it doesn't sell? So that is where most traders make the mistake. They be like, oh, this market must sell, this market must buy. The market doesn't owe you, doesn't know you, you're not the market mover, you don't move the market. Basically, you're trying to catch moves initiated by big firms and hedge companies and what have you, bigger financial institutions and maybe countries releasing news on their currency. So you're not trying to be a soothsayer in quotes and say, oh, this market must do this market must do that. No, you're basically trying to speculate. You're speculating in terms of percentages. Okay, I feel like this market is going to move in this direction based on one or two or three or four things I've seen from the previous candles, or based on where the market is currently. So you have like the basic thing I like telling people about trading. The most is it really the most important? I don't know, but it's just something that people should understand about trading. You can have a market that is flat like this. Look at market as a rectangle. Yeah. You have a market that is flat like this. Yeah. So the market keeps moving inside this box. So that's a consolidating market. So if the right angle is tilted like this, that is coming down, that's a down market is in a downtrend. So if the rectangle is tilted upwards, that means the market is in an uptrend. So you're looking at this market position from a higher time frame. You're not looking at it from 5 minutes chart or 15 minutes or maybe 1 hour. You're looking at it from 4 hours and above. So you're speculating those positions, looking at the positions of interest where you need to enter. But any place you're entering, you have to enter with your risk in mind. What is the risk? Risk is okay. I've said this market will move this way. What if it doesn't move this way? What if it doesn't move that way? You understand? So you have to always put that at the back of your mind because the market doesn't owe you shit. Market can decide to move in any way it wants. So basically, that's just an introductory rant. It's an introductory rant into trading. So, and me starting my content on trading. For now, trading is the side also for me. I have a proper job that I go to. But again, nothing is constant. To be nice to have something that you control on your own. You can set up positions and see it grow or move in your anticipated direction. So that's just what trading is. Just something you can do on the side. But in the long run, trading can be really profitable if you know what you're doing. Yeah, there will be manipulations. You see spike coming for your stop loss. You see this and that happening in the market. But in the midst of all these potholes and roadblocks, you just try to edge out a few profits here and there, and then you're good. You don't have to be right all the time. With a proper risk management and a win rate of even 30%, that's so let's say you have 10 entries in the market and you're right 30% of the time, but with a high risk to reward ratio, you'll be able to make quite some significant amount from the money. Again, my channel will not be focused on amount. I think my channel, what will differentiate my channel from other channels will be process. My channel will be focused on process, not money. You have to understand the process first before the money. Again, nothing is fixed. You could go say, okay, this market is going to go up, it's going to go down, it's going to do this or do that. You don't own the market. That's the most important thing you should understand in trading. The market is not is not in your power to decide what happens to the market. You're only a participant. You're not the market maker. You're not the admin. You're not the WhatsApp admin of trading. so right, that's just it, guys. So the name of my channel is SamirFx. Do well to subscribe. I'm also on TikTok, but I don't know. I'm not really consistent with posting content, but I'll try every now and then when I have some pocket of time. I'll try and post something on trading and hopefully, yeah. we'll grow from there. Thank you guys. I don't want the video to exceed 10 minutes. And I think we're 10 minutes on the dot. So watch out for my channel. Do well to subscribe, share the word. Love you guys. Bye. Peace.